Yeah, hi friends. So welcome to our channel again. So today we'll be going to have a look at how to hedge our portfolio. Okay. So this is for an educational purpose. So please do your own analysis before doing a real trade based on these adjustments. So why we need to hedge our portfolio? So as we all know that most of the traders or investors will never make money in the markets, right? So that happens because they fail to hedge their portfolio properly. So due to that, if there is any correction or market crash happens at sometimes, as like now the market crash happens due to this corona, so at that time most of the portfolio will start bleeding and the investors will start making huge losses. Okay, so to avoid that purpose, so we should hedge our portfolio so that we can earn money on the up move, and if there is any sudden down move, we can protect our investments portfolio without making huge losses. So hedging method 1. So this method will tell us how to reduce our downside risk. So to avoid that downside risk, we should buy one out the money put option as an insurance for our portfolio. So for example, if you're holding in Reliance stock at the average buy price of the 1400, then to protect our downside movement, we can buy the 1300 PE at the premium of around rupees 10. So in this case, we'll be paying like around rupees 1000 from our pocket to protect our downside movement. So if stock moves below 1300 level, then our bought PE will start giving us profit, so that the loss whatever happens from our holding stock will get compensated with our put options. Okay, but in this method we'll be paying an 1000 rupees every month from our own pocket, right? So this is an method 1, and if there is no down movement, then anyhow, like as we have paid the 1000 rupees as an insurance, that will go out from our packet. Okay, so here we are going to have a look at the hedging method 2. So this method will tell us how to get the monthly rental from our holding stocks. So in this case, we should sell the out the money call option, so that we'll be gaining some premium. And if the stock price doesn't move above our sold call option, then we'll be getting a monthly rental as we sold the call options, right? So for example, if you're holding in TCS at the average price of rupees 2000, then you can sell 2200 call option. So if the stock moves about 2200, then we need to sell our holding stocks at 2200 rupees, and we can book the profit. So beyond 2200, whatever the loss happens in the call option will get compensated from the profit from our holding stocks. Okay, so if the price doesn't move about 2200, then we'll be getting that entire premium which we collected from the 2200 call option as our profit. Okay, so in this case we'll be holding our stocks without doing any changes to that holding stocks, and we'll be getting that monthly rental. So hedging method 3 is like, in this method we'll come to know that how to buy the insurance without paying any amount from our pocket. So in the method 1, we have seen that we are paying 1000 rupees every month to buy the insurance as a put options on the downsides, right? In this method we'll be going to have a look how to buy that insurance at a free of cost. So for that case, first we need to sell one out the money call option of our holding stocks, and we need to buy one out the money put option for the same amount which we received from the selling call option. For example, if you sold the call option at rupees 10 as a premium, then buy the put option which is available at rupees 10. So in this case, we have reduced our downside risk, and also we have bought the put option at free of cost, as we are buying the put option from the premium which we collected from our call options, right? So there is no premium which we are used for buying that put options. So but in this case we are not collecting any rental income as we discussed in the method 2, but instead we are buying that insurance at free of cost. Okay, so in method 4 we are going to have a look at how to compare all these 3 methods which we learned earlier, and we can combine all those 3 to buy the insurance at free of cost, and also we can earn the monthly income as rental as well. Okay, so for this case, first you need to sell one out the money call option, and then we can receive the premium by selling that out the money call options, right? So after that, sell one at the money or nearby out the money put options. So we'll be receiving 2 premiums by selling one out the money call option and one more out the money or out the money put options. So now we have two downside risk, right? So one is if the stocks moves down, our holding stock will start bleeding, and also our out the money put option will give us loss. So to hedge that both the negative options and the holding stocks, we need to buy two out the money put options. So to hedge our holding stocks and to hold to our sold put option. So for example, if the stock is at 1500, then sell the 1600 call option at rupees 10 and sell 1480 put option at rupees 20 and buy two lot of rupees 1450 put option at rupees 10. So in this case, so we'll be collecting rupees 10 from the upside, and the downside will be collecting rupees 20 from the put option, and will be buying two lot at rupees 10, so which is like to compensate this 20. So for buying this put option at rupees 20, we'll be selling one put option at rupees 20 at the 1480 strike price put options, right? So by this case, we'll be collecting the premium at the call side as our rental income, and we'll be buying that insurance at free of cost. Okay, so in this case, if the stock moves above this 1600 level, then we need to book the profit and come out of that. So come out of the trade. And if the stock moves below, then we'll be collecting that rupees 10 as our premium, and also like we'll be getting a downside profit from our bought put option, and the loss which happens in our holding stocks will get compensated with the help of the bought put options, right? So this is our four hedging strategies which most of the investors use to hedge their portfolio. So thanks for watching, friends. So please do subscribe to our channel, and please click on that bell icon so that whenever we upload any new videos, you will get an notification as well. So thanks for watching.